Management video blog. Today is Tuesday, September 27th, and it is the day after the first presidential debate. And, it was not as much as a you-know-what show as I thought it was going to be. Yes, there were some snide remarks and there was some bantering back and forth, but really I thought that both candidates kind of kept their cool, although one certainly seemed to get a little bit rattled more than the other. But look, here's the bottom line is this is what Wall Street's thinking. Okay, this is not my opinion. This is Wall Street. Had Donald Trump gone in there and actually won this debate, you would see the market down probably 100 to 200 points today. He did not do that. The consensus is that he did not do so poorly. In fact, a lot of the consensus is that he probably won the first 45 minutes of this debate, but he didn't end strong. So the markets are pretty flat this morning. In fact, we saw a rally in the futures, meaning the market was indicating, the Dow was indicating, up 100 points early this morning because it looked like it was a Hillary win on the debate. And the market really, look, the market doesn't like surprises. It doesn't like unknowns. Hillary's not an unknown. We know what you get with Hillary. We're going to get same as the last 8 years. Whether you like it or not, that's probably what you're going to get. Not so bad, considering you don't know what you're going to get the next 4 years with Donald Trump. Now, what's interesting is that on October 27th, I'm doing an event, and we're talking about the election, how it's going to affect your investments, your retirement funds, your income, a lot of interesting things. Doing it at Cafe Murano. So this is by invitation only, but I will let a few of select people come in. So if you want to attend the event, just let us know and we'll discuss it. But it's going to be October 27th. It's going to be a great event, dinner there, the whole nine. So anyway, so far, the markets really have, again, reacted fairly benign. We're very flat this morning. Now, the month of August was flat. We talked about that earlier. EKG, if it was the month of August, you'd be gone. Month of September, we're down about 1.1%. Typically, September, October, the worst months of the year. You have a lot going on with the election, obviously. You have another debate coming up in a few weeks. So the bottom line is caution is still where your philosophy needs to be. Look, I say if you go out and take some enormous risks, you're really asking for some trouble. When you want to take some risk and put some risk on trades is when the market does give you that pullback. And we're starting to see that now. I'm looking at the chart of the market. Does not look good. Certainly the S&P looks like it wants to go lower. So make sure that you have some either mental stops in place or some ideas where you want to sell some of your holdings. We've already been selling stuff. We have a lot of cash on the sidelines, and we're prepared to do some buying. That being said, the sectors you want to look at, looks like healthcare starting to get frisky again. Looks like some energy starting to get frisky again. I'm not sure about the banking sector right now. I mean, rates seem to be not moving anywhere at this point. Probably in December we'll see a Fed rate hike, probably. We're not sure about that either. But obviously in a rising interest rate environment, the banking stocks are where you want to be. So small cap will probably be okay, but again, I'm being very cautious. I'm not out there swinging a big bat. I'm looking for opportunity. When I see it, I will certainly share it with you folks out there. In the meantime, we are doing a bunch of portfolio reviews. So if you're not sure what to do in your 401k, if you have a portfolio, an IRA, and you're not sure, or you're not sure you're taking enough risk, not enough risk, whatever the case may be, we're actually going in there and delving in and taking a look at your portfolio and seeing if it matches your risk tolerance and your suitability. Also, the college performance, the college analysis plans, we're doing tons of those. Wow, you guys are doing great on that. You're bringing in, and all we're basically getting is the names of the kids, ages, date of births, and where they want to go to school, or ideas, a couple different schools, and it's coming out great, and how much you have so far put away for college. So there's some great analysis going on there. We'll do that for free too. And the portfolio analysis are free. We hope that one day, if you decide that you need a portfolio manager, you select Silo Wealth Management. Anyway, in the meantime, be cautious. All right, don't do any crazy buying. I think this is a buy and pullback mode. I don't foresee a bear market here. It's not happening. I do foresee, I'm predicting here that we will see a recession within the next 24 months. I think we'll, again, keep in mind, usually you don't know it's a recession until about 6 months into it. But I foresee that I would think the second year of this next presidential cycle, we're probably in for a little bit slower growth and probably negative growth in our GDP for a little while. So anyway, that being said, I'm Lee Seiler, Seiler Wealth Management. If you need to get a hold of us, you can call the office, 407-831-8002. You can email me, message us. You can just send over, email your for the college analysis plans, or get a hold of us. We'll tell you exactly what you need. And in the meantime, you guys have a fantastic day.